Good morning, and welcome back. NIO heads into Wednesday's trade with the stock at $4.51 in after hours, a modest gain of 4 cents after Tuesday's sharp pullback. It's not a huge move, but given the hit the stock took yesterday, it's at least a sign of some buying interest returning before the next session opens. And this morning, we actually have more to talk about than just the tape. On the news front, NIO has announced two concrete developments that fit squarely into the long-term bullish story we've been building in these videos: continued expansion of its battery swap network and solid delivery growth for July. Let's set the stage by quickly recapping where we were before Tuesday's session. In our Monday video, we were tracking NIO's steady climb toward the $5 level. The stock had closed at $4.91, just a whisker away from a breakout test. The technical picture was constructive, $4.80 acting as short-term support, and the broader EV sector not throwing up major headwinds. Fundamentally, the battery swap profitability story and the ONVO L90's potential in 2025 were giving us reasons to keep the tone measured but leaning bullish. Then Tuesday happened. Instead of breaking higher, the stock sold off sharply. The catalyst? It wasn't a NIO earnings miss or product delay, it was a mix of external pressures. BYD announced meaningful price cuts on 22 models, reigniting fears of a domestic EV price war. Investors know price wars can compress margins across the sector, and NIO, with its premium positioning, has to walk a fine line between holding brand value and staying competitive. Add to that renewed chatter about US delisting risks for Chinese companies and a generally weak day for XPeng, Li Auto, and the broader China market, and you had the recipe for a sharp reversal right below a critical technical level. But here's where the narrative gets interesting again. After the bell, NIO ticked higher in aftermarket trading, and overnight we've had two pieces of news that speak to the long game. First, battery swap expansion. NIO has now completed initial swap station coverage across all districts in Tianjin with 56 stations deployed. On top of that, they've partnered with ZDK Group to build 100 new swap stations in northeast China. These aren't just symbolic milestones, they're strategic moves. The Tianjin coverage is about density and convenience in an urban setting, while the Northeast Partnership expands reach into an important regional market. Both support the narrative that NIO is steadily building an infrastructure moat that's hard to replicate. Second, deliveries. NIO delivered 21,017 vehicles in July, up 25.2% year-over-year. Year-to-date, they've delivered 135,167 units, bringing cumulative deliveries to 806,731. This isn't runaway hypergrowth, but it's steady, double-digit percentage improvement in a competitive market. And importantly, it's coming alongside the infrastructure growth story, not at the expense of it. From a fundamental perspective, these updates matter because they reinforce the themes we've been discussing all along. The battery swap network, now averaging roughly 97,000 swaps a day, about one every 0.88 seconds, has moved past the expensive science project stage into something that is generating cash at many locations. With more stations, that profitability footprint expands. The more swap points you have, the more convenient the service, and the stickier the customer relationship becomes. And when customers are in the ecosystem, NIO controls battery quality, upgrades, and recycling, a long-term cost and brand advantage. On deliveries, hitting 21,000 in a month while scaling infrastructure is a sign the brand can balance volume growth with strategic investment. It also sets up the ONVO L90 launch to hit a market where the infrastructure is ready to support new customers immediately. CEO William Li's target of a Q4 2025 profitability boost from the L90 is still well down the road, but each monthly delivery report like this builds credibility. So where does this leave us heading into Wednesday's open? In the short term, the technical picture is still dominated by the same levels we've been watching: $4.80 as near-term support and $5 as the breakout barrier. Tuesday's drop pushed us back into the mid-$4s, so the first test today will be whether aftermarket buyers carry over into the open. If we can hold above $4.50 in early trade, that at least sets a base for another attempt higher. For traders, the key will be whether volume supports any push toward $4.70 to $4.80 during the session. Without volume, rallies may fizzle quickly, especially if sector peers are mixed. XPeng and Li Auto are worth monitoring here. If they're green, it's a tailwind; if they're red, it's headwind. For investors, today is about weighing short-term volatility against the long-term arc of the story. Tuesday's pullback was a reminder that Chinese EV stocks are exposed to macro and competitive headlines outside their control. But the overnight and pre-market updates show that NIO is still executing on the things it can control, rolling out infrastructure, delivering cars, and expanding its footprint. If you zoom out, the stock is still trading in a tight band relative to the highs and lows of the past year. The $5 breakout story is delayed, not derailed. And if you believe in the infrastructure plus product strategy we've been outlining, these dips are as much an opportunity as they are a setback. As always, keep your risk management front and center. This is a volatile space, and while the fundamentals are improving, headlines, whether about price wars, regulations, or sector moves, can swing sentiment fast. But if NIO can maintain delivery momentum, keep scaling profitable swap stations, and prepare for the Onvo L90's entry, the longer-term trend can stay intact even if the short-term chart gets choppy. So heading into Wednesday, my watch list looks like this: pre-market stability above $4.50, early session attempts toward $4.70 to $4.80, and sector tone from XPeng and Li Auto. On the fundamental side, I'm keeping the battery swap expansion and July deliveries in mind as reasons to keep the tone constructive, even after Tuesday's disappointment. Let me know what you think in the comments. Are you treating Tuesday's drop as a buying opportunity, or do you think we've got more downside before we see another attempt at $5? Either way, Wednesday's session will tell us a lot about how quickly NIO can recover its footing.